just want to give a high-level update on what we're seeing in the marketplace. And unfortunately, it's going to be another week of not so great news. Unemployment, as most everybody has seen, that was released on 4/9, showed another 6.6 million applications for unemployment. So that brings us to a 3-week total of over 16 million. What we're also seeing is some significant dynamic shifts in the air freight mode. So more and more of the passenger airlines are jumping into the cargo game. And as we reported before, about 50% of the cargo volumes actually travels in the belly of passenger aircrafts. So when you ground 90% of those aircrafts, you can see that there's an immediate 35-40% of capacity that's just immediately removed from the overall marketplace. So that is contributing to what we're seeing in terms of significant cost per kilo increases throughout the air freight industry. And to compound that, so the U.S. government has ordered 100 charter flights out of Shanghai into LAX, Chicago, and JFK for the month of April. So that's further going to reduce the capacity that's available. So we're expecting rates to go over $12 a kilo for the West Coast. And normally, just to give you, a little bit of scope and context, normally that's around a $2.50, $3 a kilo lane, and over $15 a kilo for the East Coast, and that's closer to $3.50. So these are truly some incredible times. American Airlines, to stick with the air freight, American Airlines announced they're canceling all passenger flights to and from China through October of this year. So they are trying to take the lead on this. We've seen some other airlines who have canceled flights through May. So this is an aggressive move by American Airlines. Nippon Cargo Airlines has canceled all services into Chicago after a warehouse worker tested positive for COVID-19. So more to come on that. I'm tracking that on a daily basis, and I will give an update as soon as I have it. On the ocean freight side, we're seeing a lot of what's been trending. Port of LA volumes are down 31% year on year for the month of March. So that's imports, exports, and empty container movement as well. We're seeing a dearth of available empty containers at inland points in the U.S. So if you are an importer or an exporter, would be interested to hear how you're managing through that. Government of India has extended their lockdown for another 3 weeks. So as we had reported, I think 2 weeks ago now, they were in a 3-week shutdown, and they went ahead and extended that for another 3 weeks. And as we mentioned before, India produces 20% of the world's generic pharmaceuticals. So this is a really, really significant thing given everything that's going on. In the ocean freight space again, there's been 250 blank sailings across all trade lanes, which has removed 3 million TEUs from capacity. So what the residual effect of that is that rates are actually holding steady. So Asia to the U.S. West Coast, it's essentially flat, around 1,600 per FEU. And rates from Asia to the U.S. East Coast are down a little bit, about 5%, to around 2,700 per FEU. In the domestic space, so one thing that we're tracking very closely is the tender volume index. So back on 3/27, this was just under 13,000. And to give everybody that context, so 10,000 is where it's indexed at. So anything above that is showing capacity tightening and volumes going up. So it's just under 13,000. On 4/6, it went down to 10,420. Yesterday, it was just under 9,000, and today it's 8,700. So again, significant drop-offs. It took us about 31 days from the time that the market started to tighten to hit its peak, and it's taken 16 days to hit this absolute low. So this is truly decelerating quickly. The other key metric that we like to look at is the tender rejection index. So on 3/27, this was over 19%, so significantly high. In fact, the highest volume that we've ever seen. On 4/9, it was down to 7.6%, and just yesterday it dropped below 5%, so at 4.5%. So again, significantly down. And that outbound tender rejection index is when a carrier rejects contracted pricing. So when capacity tightens, obviously there's more rejections, and you can all see follow the narrative here. The load to truck ratio is down 44% week on week for dry vans. Flatbeds are down 43%, and reefers are down 42%. So not a great story there either. And what we're projecting here at Aborn & Co. is you're going to see some of these small truckload carriers have to exit the market. They're just not going to be able to weather the storm, so to speak, and get through these trying times without the volumes to support that top line revenue. So we think capacity will shrink down. And, as an output of that, in Q3, and that's heavily caveated in that a lot of things need to happen, and a lot of things should happen in order for everything to open back up. So if we use Q3 as sort of the line in the sand, so to speak, you're going to see rates go back up and back up significantly. So if you do not have contracted pricing, it's something that you probably want to be speaking with your carriers with now. And I would have those internal conversations with your finance teams and let them know, hey, there's something coming and it's not going to be the greatest of news. So we're going to reap the benefits of all this. And by reaping the benefits, it's just lower rates. But that pendulum is going to swing back in the other direction, and it's going to be heavily in favor of the carriers in a couple months, depending on when everything, quote, opens up. On the fuel standpoint, so U.S. national average for diesel is now at $2.51. So that's 14 straight weeks of decreased pricing. There has been an agreement with Saudi Arabia and Russia. So if you've been following this, it's all about reducing the output of oil production. So there's been an agreement to cut output by 10 million barrels per day for May and June. But demand overall is down 25 million barrels per day. So that just means that I think we're going to see continued drops in pricing in diesel and home heating oil and all that stuff. The price of crude, the WTI price of crude today is below $20. And the price of Brent, which is more tied to the international space, is at 27. So again, we're continuing to see this downward trend on all things energy related, fuel, oil, et cetera, et cetera. So what we're seeing also is, some of our importers and exporters are looking at different types of solutions. Like, what else can we do? If we are a heavy air freight company, if we are heavy in ocean, but we can't wait because of all these blank sailings, what else is out there? And we want to talk about sea air options. So where something is stuffed in an ocean container and it goes to Dubai or Malaysia and then it's air freighted in. This is a really good solution if you are if you're a receiver in Europe, just because of the really long transit times. If you're manufacturing out of China and you're shipping to the U.S. West Coast, not a great solution. So it wouldn't be the same cost as air freight. It'd probably be 60% of what we see in terms of cost for air freight. And the transit time would be better than ocean freight. So just some thoughts there. And then some other carriers too, Matson and APL. So they are heavily marketing express guaranteed services for both the U.S. and Europe as well. So if anybody needs some additional information around that, I'm happy to jump on a call, send me an email, anything at all that you need. And I can help, steer you and navigate you in the right direction to help facilitate some good solutions for your companies.